Let's get started. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I gotta actually do an update on this really quick. I apologize. I do not have that anymore. I sold it today. I do not have that. Alright, so this is the position disclosure. I got stopped out of FUBO today. Very weak today. I'll talk about it. Still got that VXX short, which is basically a long, you know, as far as exposure goes. AMC is my only real short. I'm a little bit heavier in AMC than I had been. I'm not getting huge on it, just trading it back and forth because I understand the risk there. They could really squeeze that if they want to, but I still don't believe in the company. Okay, let's jump into it. So, how did we close today? It kind of felt like a bearish day, didn't it? But we had a bit of a strong close, and we're actually up 0.3%. The Qs are flat, and the IWM back to being relatively strong. So the Russell is up 0.7% today. It's interesting. So relative strength in the Russell, relative strength in the XLE. XLE actually broke its first level of resistance. So let me make myself bigger. XLE broke its first level of resistance. $50 is the bigger level that I've been talking about, that I've been paying attention to. XLF had relative strength, but TLT was higher. So TLT today is up 0.7%, so interest rates were actually down. So that's what's interesting about today, is usually when you see interest rates down, you see weakness in the NASDAQ. Sorry. Usually when you see interest rates down, you see weakness in the IWM, you see strength in the NASDAQ. So you see weakness in financials. Interest rates are down. It's not good for banks. Obviously, this is not like a one-to-one correlation or anything like that, and outlier days are always going to happen, but interest rates are down today, but IWM, XLE, XLF are what led us higher today. So just interesting, kind of worth noting. Again, you know, just one day today, and it wasn't a huge move on the TLTs. Nothing really to write home about. We're still below 150, but all the same, notable. So our SPYs managed to close above 446, so that's above the area where I was talking about in the morning meeting. I was saying 446 is a spot where I feel like the S&P goes from bullish to neutral, though we still need to negate Friday's negative Maribozu candle. I'm going to circle back to that. I just want to look at the Qs in the IWM, and then I want to spend some time talking about this morning's gap up after yesterday's negative Maribozu, because I think it's a really important thing that everybody's got to take into kind of their trading playbook. So Qs 375 is the big spot I've been paying attention to, where I think we'll go from bullish more to neutral if we lose that level. We actually ticked below it today, closed back above it, and that's with the NASDAQ kind of being the relatively weak index on the day. And the IWM is still in neutral territory as far as I'm concerned, below 225. The negative Maribozu high from Friday is about 225 quarter or so, 225.29. But it's an interesting tail back up here with the IWM showing the most amount of relative strength. So I want to go back and expand upon what I discussed in the morning meeting about our big picture game plan for the day. So just to take a half step back on everything, when I do the morning meeting, and I know we got new people on the team here, we got new VTF members, so this is worth kind of reviewing. My approach to the morning meeting is I start with big picture game planning based on big picture technical analysis and a little bit smaller picture gap analysis from that day. And I start with that, and then I work my way kind of down, if you will, to the individual stocks that I'm planning on focusing on, the particular setups, the particular trigger points that I'm looking at for the technical trade. And then after I go through all my stuff, which includes an analysis of the market, an analysis of the gap, the big picture game planning, the smaller picture stuff that I'm planning on focusing on, then we kind of turn it over to you guys in the VTF to review your ideas as a team. And I love doing that, by the way. It's a great part of my practice because, you know, as early as I try to start my research each day, it's not possible for me to go through every single stock that exists in the market from a technical perspective or even from a news perspective, especially when we're in earnings season. So it's awesome that you guys all bring your ideas to the table. We can review them as a group. Some of those ideas, I'll let you know why I don't like it. Some of those ideas I like so much that I add it to my own list. And then that sometimes becomes a stock that I get involved in. And I love more than anything else when you guys are able to make me money. So that's kind of the structure of the morning meeting. But it all starts with that big picture game planning analysis, because the big picture game planning analysis is huge on your probability. Like, even if you thought you should be buying some stocks today, maybe you're right. Like, look what the IWM did, right? The Russell today is up 0.7%. So if you just like closed your eyes and bought stock at 931 this morning, and now you're coming back at 359, and you happen to be buying stocks that are correlated with the Russell, at the end of the day, I guess maybe you're making money doing that, but that's not a good approach for obvious reasons. There's no, risk management in that approach. Trades that you take need to have a technical reason why you're getting in the trade. You also need to have a technical out or a technical stop loss, which is the reason why you'd be exiting that trade for a loss. So for today's big picture game plan, we discussed two main things. Let's go back to the SPYs. We discussed the negative Maribozu from Friday, that Friday's close put the S&P kind of more into neutral territory for the first time, whereas the IWM also had a negative Maribozu, but it was already in neutral territory. And the NASDAQ also had a negative Maribozu on Friday, but is still above 375, so the NASDAQ itself is still in what I would call the bull zone, the bullish zone, where you want to err to the side of the longs. And then we were coming in this morning, and we were having pretty large gap ups higher. Like, what was the S&P up this morning? Like 0.7% pre-market when we were doing the morning meeting. It was actually one of the bigger gaps that we've seen in a while. And if you guys remember, last couple of weeks here, one of the reasons why I haven't really liked this price action end of August, beginning of September, is because there's been almost no gaps, right? Not only have the ranges been so tight over these trading sessions, but every morning I'm walking in and the market's flat. I hate when the market's flat because I have no real strategical advantage that comes from the gap. Gap analysis is a huge part of my research because it leads into the big picture game planning that I'm going to be basing my entire approach for the day on. And sometimes a gap can tell you that you should be being or consider being really aggressive for that trading day. And other times a gap is going to tell you the opposite, that you don't have an advantage, that you need to take a half step back away from the market. The thing about today's gap is it told me I can't do much buying. Why? Because we're having a 0.7% gap up, one of the biggest gaps, and it's still not massive, it's only 0.7%, but it's one of the biggest gaps that I feel like we've seen in probably a month since the actual breakdown in mid-August of the S&P here that got bought right back up. But basically since that's happened, we've had no significant gaps probably since August 24th or so. And today we had a significant gap higher, 0.7% in the S&P, but it was after a negative Maribozu candlestick in all three of our major indices. So what the negative Maribozu does is it puts the market in what I call the penalty box. Even the NASDAQ, which the NASDAQ is still above all key levels that has it big picture bullish, it still was in the confines of a gap up after this negative Maribozu. So, what does a negative Maribozu candlestick mean, especially when it's trading on relatively higher volume? And I wouldn't call yesterday's volume huge, but you can see here, just looking at it, that it is relatively high compared to anything that we've kind of seen over the course of the last several weeks. And it was a selling candle. So, we know, and again, a Maribozu is a type of Japanese candlestick that is defined by having little to no tail and a large body. So basically we know that sellers were in control for almost the entirety of the day on Friday. The market opened up with a gap up on Friday. Sellers came in. They were in control. They drove us down all day, and we closed at lows, and then we're gapping down here this morning. So I know that a lot of people sold stock on Friday. Were they short sellers? Were they long sellers? I don't really know. I'd be curious to know that because we do know that back here in mid-August, that was primarily actually short selling and hedging that caused this little mini sell-off here for a few days and not actually long selling coming into the market. But this type of candle, again, it's what I call like a penalty box candle. We're putting the market into the penalty box. Is the market still bullish? Well, you're looking at the NASDAQ, it certainly is. You're looking at the S&P and the IWM, it's a little bit more neutral. But I know that sellers were in control all day on Friday, and usually that leads to a continuation of sellers being in control unless the candle is able to be negated. How does that candle get negated? Basically, the price action gets above the high of the Marubozu. If we can ever get above the high of a negative Marubozu, especially one that had high volume, what do we know? We know that every single short seller from that day, and there's probably a bunch of them confirmed by the volume, is getting squeezed. And we know that anyone who is a long seller, they made a mistake. They sold, and now it's above the price that they sold, and maybe they have FOMO and they're coming in, they're buying back stock, or maybe if they're not rebuying their stock, they're at least not selling the stock that they don't own because they already sold it. So when you can negate a negative Marubozu, that actually oftentimes leads to higher price action. But until and unless that candle can get negated, the market's in the penalty box, at least on a very small time frame. So that is the message that the market's telling us from Friday's candle. And now today we come in and we have what's called a common gap higher in the market. There's a lot of different types of gaps. The two most typical gaps that we see are one, the common gap, which is also sometimes referred to as an area gap. And the second most common that we'll see is a breakaway gap. I have a lesson in my training program that lasts for about an hour that discusses all the different types of gaps and what you need to know about them. So I definitely recommend checking that out. I'm not going to get into detail on every type today. But for today's gap up, it was a common gap higher. A common gap is basically a gap that occurs within previous price action. And common gaps tend to get filled. Okay? Common gaps have a much higher probability than like a breakaway gap of a gap fill occurring. So what is a gap fill? A gap fill is when the price action trades back down to pretty much unchanged. And you can see here that's exactly what happened. So if I know that Friday was a negative Marubozu with a little bit of a volume pickup where sellers are in control, and now I see today we're having a common gap higher, and that type of common gap is usually filled. Do I want to come in and start doing aggressive buying in the marketplace? The answer is no. Even if the S&P is back in bull territory above 446, even if the NASDAQ was never even in neutral territory because it stayed in bull territory, do I want to come in and be an aggressive buyer when the market's gapping up 0.7% after a negative Marubozu? The answer is no. What are the supply and demand implications of that? Well, people who are hesitant to buy on Friday are not going to jump in and start buying the market 0.7% higher. So you're going to be kind of devoid of buyers. But you're not gapping up so big that shorts are getting squeezed. If anything, shorts are viewing this gap up as an opportunity to be able to short more at better prices that they were not able to get on Friday. So basically the supply and demand implications of a common gap higher like this is longs who maybe were trapped from this price action on Friday are having a sigh of relief. Oh man, I can sell my stock. New longs are not looking to come in, and shorts might potentially pound the market even more. So that is the supply and demand dynamic that typically leads to a common gap higher getting filled. Common gap down is the opposite. Buyers will tend to come in, sellers don't come in as aggressively, and they tend to get filled. So I'm looking at that this morning, and basically what the market is telling me is I need to have a bit of a hands-off game plan. And if anything, you even could have considered short selling it. I'll tell you why I didn't really want to do that. It's because the NASDAQ is still in bull territory above 375 as far as I'm concerned, and the S&P, which closed in neutral territory based on my numbers on Friday by just a little bit, It was gapping up into bull territory. So I feel like there were too many things against me to really be an aggressive short seller and expect big follow through today. But I also definitely don't want to be coming in and chasing that gap. So net, what does that mean to me? It means that I want to be hands off as far as my game plan goes. And that's basically what we said. Let's be patient this morning. Let's not do too much. Or if we are focusing on anything, let's focus on stocks that are maybe, these short squeeze names or having high volume coming in or trading with news, can trade in their own world. And honestly, I didn't see a whole bunch of those pre-market this morning that I had a big interest in either. So I just didn't have a big list on that. I know a couple of you guys might have brought up some okay ideas to look at. I didn't really start considering longs. First I was looking at this pivot. I was looking at this pivot here because sometimes in a bullish market, and we have been in a bull market, they don't fully fill a gap up. They just retrace a percentage of it. That percentage of it is usually kind of in line with those small time frame moving averages. So we're no longer extended, like we're extended to the upside on the 5-minute chart when the market's opening here. Right? The way I measure extension is the space between where the market's trading and the space between the 8 and 21 EMA. So we're extended on a small time frame. We come down here, we pivot at 9:45 into the moving averages, and I think I remarked out loud, we might see like a bounce here that could lead to a lower high. I'll be surprised if the market makes new highs off of this. So I didn't necessarily think that we were going to fully come in and fill the gap. I didn't think that we were going to make new highs. I did think that we would get some sort of bounce here, and then we can kind of assess. And that's pretty much exactly what happened. What also had me thinking about that was that the IWM at that exact moment had actually filled its gap entirely. So the IWM, you can see, also had a big gap up. The Russell, it fully filled its gap, actually overshot that a little bit. So I'm like, all right, Russell just filled its gap, and we know now gap fills is sometimes where you will see intraday support on the gap fill for all the reasons I just kind of described, right? The same buyers who didn't want to come in because the market was gapping up too much might be willing to come in a flat market now and actually start buying some stock back. So I'm like, all right, Russell just filled its gap. SPYs are no longer extended. They pulled back to the 80 EMA. They're trying to pivot. Qs at the exact same time were trying to pivot off their gap fill as well. And then the interesting thing that did happen around 10 o'clock today, though, was, I guess it was a little bit after, was the switch in relative strength and relative weakness. The Qs were trying to be stronger than the IWM. You can see that here based on the gap fill. The IWM fell through into negative territory, had a real big bounce back, though. That's where the relative strength, relative weakness flipped, whereas the Qs couldn't do it to the same degree. So that's where I want to start thinking about buying, potentially in here. And again, that new low would have came in. Here's your gap fill. Look, all this price action was pretty tricky today, and it led to a relatively weak market. I really did not see a whole bunch of stuff that I was focused on, but by having a game plan, big picture, that told myself, you know what, less is more today based on all these technical factors. I'll tell you what didn't happen. I didn't hurt myself. I didn't come in and start buying stuff right off the open for whatever reason because I knew that the market was potentially against me for all these factors that I just discussed. So did I make a ton of money today? No, I didn't. I was really negative at one point today. I was able to fight back to positive and finish the day in the green, but I didn't make a lot of money today. But I was able to recognize that the market was not providing me a lot of opportunity, and I was able to create a bigger picture game plan for myself that had a less is more approach so that I didn't hurt myself. And honestly, sometimes that's a win because the market doesn't provide us the same degree of opportunity every day. And I think that one of the biggest things that you need to be able to pay attention to if you're going to be successful in this business is knowing when the market is providing a lot of opportunities so you can be really aggressive, and knowing when the market's not giving you that same advantage and that you should be passive. And today, without a doubt, was kind of one of the latter, right? And it made and saved you money if you did that. There were a couple capitulation type trades that I took that kind of coincided with, the market hitting some of those key bottoming type areas where I thought maybe we could get a bounce that paid well for me. I called out this root here on the break of $6. That's also where it's volume maximized, right? So they sold this root off pretty hard here in the beginning of the day. This has been a name that we've been looking at because it's had pretty good option flow. I think more like Wednesday, Thursday of last week, and then I don't think we saw as much on Friday. But Wednesday, Thursday last week, we saw a lot of option flow. I already have a position in this that I've been managing, and I use this downside extension with the volume maximizing back through $6 to get heavier on it, and then this actually closed pretty well. So root actually turned into like a decent little capitulation type trade for me today. Another one was Snap. Snap, by the way, we actually had this as a long idea for if it was able to start clearing above like 76 bucks today. It never really cleared that 76, so I hope no one got triggered into this. And the thing that put it on our radar was the relative strength pre-market from Goldman initiating this thing with a buy and a decent buy target. I swear the Goldman analysts are the biggest jokers on the street. They know absolutely nothing. You can almost take the opposite side of every analyst initiation that those guys do. And the conspiracy theorist in me has thought for years that they're literally coming in on the opposite side of their trade, because how often I see this. Goldman comes in and buys, and then the stock sells off. Like, I could go into a huge rant. I'm not going to do it right now. Maybe I'll do it as like a little mini class. I've been doing a lot of these mini classes recently that are getting posted on YouTube on why the analyst job is the biggest joker job on Wall Street. The sell-side analysts are such jokers. So hopefully no one got hurt by buying Snap right off the open, because it never actually got above 76 bucks. But we were looking at that as part of our pre-market research for upside continuation, because it's a good look at daily chart on top of the Goldman initiation. It said they wrecked this thing, and the degree of extension down here as volume was starting to maximize into the $70 area. There was a trade here. I didn't take it, but I know some of you guys were looking at this and taking this as a trade back through 70 bucks. I think I actually called it out, even though I didn't take it. My plate was a little full already by that time, so that trade actually worked out pretty well. I got stopped out of FUBO today, but there was also kind of a capitulation set up in FUBO at one point. Look, they wrecked this thing early on. Look at that selling pressure on the 5-minute chart, but also got super extended as volume kind of maximized. So I discussed maybe a little trade back through 28. Did not give great follow through. I was looking to sell stock. The high here is 28.22 on this initial bounce. I was looking to sell stock, I think, at 28.28. Maybe 28.32, I forget exactly which, right at the ADMA. And I couldn't quite get filled on that. Then it came back down. Luckily, it made an equal low here, and then it actually worked up and kind of gave that bounce before breaking a new low. I still didn't get stopped out. My big picture stop on this thing was actually based off the low on August 31st. That's when I first got into my swing trade, was the break of $28. The low that day is $27.59. So this name paid me really well. I was able to book profit on the way up. I reloaded a couple of days ago into $28. I got the bounce back to 30, and then today they wrecked it all the way back down and stopped me out. So, decent multi-day swing trade here where I was able to make money on it. Definitely still disappointed though, because I gave back a lot of open P&L and it stopped me out. But it is what it is. It's just trading. But those are some of the trades that I was looking for today. Was around 10 a.m. ish when I thought that the market could give a bounce, because the gap fills had occurred here on our indices. That's when the SPY gap fill even occurred about 10:15. The Q gap fill got overshot a little bit. So that and some of those stocks were just so extended, the volume was picking up, that there were little capitulation buy setups. I know I've spoken about that in an afternoon meeting recently as well. So again, the lesson, and this is what's so hard about trading. It's also one of the beautiful things about trading that I love. But the lesson that I want you guys to draw from this is, markets are dynamic, and that's also one of the things that makes trading difficult. Is it's hard in real time to recognize all of these things that I'm discussing that are taking place basically all at once, but that's what you got to try to be able to do. You're looking at these stocks that you have on your watch list. Again, let me take even half a step back from that. You're starting from that bigger picture game plan that's giving you an understanding of how aggressive I should or shouldn't be, where I can start looking to trade. The market opens up, you know what the game plan is. You've also got a watch list maybe of other stocks or whatever, especially on a day where the market's hard. And now you're watching the story unfold in real time. And you say to yourself, all right, here's where the gap fill is. It looks like, oh, look, If you tried buying Qs here off a gap fill with this little hammer doji or stocks that are related to the Qs, and then eventually you got stopped out at the new low, that's the right spot where you want to come in and you want to try this stuff. And then if you can combine what you're seeing with the market, with the S&P, the NASDAQ, and the IWM, which to make it even more difficult are showing you different pictures, so you also have to understand relative strength and relative weakness. But if you can be bringing in all that information into your brain on what the market is doing, plus the relative strength and relative weakness with the bigger picture game plan, and then break that down to your watch list of individual stocks and see what those names are doing, and see that root is then having the volume pick up, because we know volume is confirmation on a trade as you're kind of getting the hammer capitulation buy setup actually come in. Now you've got multiple things coming in on the side of your trade where you can get involved and you can put yourself in a position that's advantageous to you, where you can be consistently profitable in the long run. It's not always easy. Days like today, it's hard. The patience is hard. Sometimes you're trying a couple of times. You're trying the Qs here, and then they end up being relatively weak, and the IWM being relatively strong, and you get pushed out of it. It doesn't mean it's a bad trade. It's not always easy in this business. Most of the time, it's not easy. Sometimes it is. Sometimes, everything, the sun, moon, stars kind of all align. You get that perfect gap down when the market was already oversold and things are coming into support levels, and the volume is huge right in the beginning of the day, and everything comes together, and you are being super aggressive off the open, and you make a boatload of money for yourself. Those days happen, but they're much more few and far between. The majority of the days are going to be more difficult, where we need to either be focusing on specific setups that are in play, where then you don't have to pay attention to the market factor as much, or you got to be good enough to be able to digest all of this information that I just kind of did my best to describe to you guys in real time as it's happening. Put your trades on, have your stop losses in place, recognize the relative strength and relative weakness, sometimes get stopped out, sometimes go to a different trade, sometimes get stopped out, be patient, let that next setup come back into play, and recognize, bam, here it is, and I can come in and potentially make money for myself. Whew. So that's kind of where all that's at. And again, it's not always easy, but that was my plan for today. It worked out really well for me. I was able to go from, my swings were hurting me a good bit, to adding on certain names in the right places and being able to take stock off and having a really big P&L comeback. I was down 5 figures at one point today to, being green on the day. 4 figures nicely in the green, and finished up with a little bit of a positive day for myself because I was able to stick with that big picture game plan and be patient early on in the day. Yes, that's all I got for you guys. I feel like I had a couple other names that I was thinking about talking about in the meeting today, but I already forget what they are. So we'll just stick with the lesson on gaps plus candlesticks today, and time frame continuity and all the other information. All right, so happy to take a look at any names that you guys want me to look at. I'm scrolling back to about 10 after 4 here in the VTF. Open Door Technologies announces proposed secondary public offering. Man, that's how they kill these stocks. Did Open even trade higher coming into that? Oh yeah, wow, it did. Look at that, man. Is this after hours what it's doing? Oh no, that was during the day today? Or was that after hours? It's after hours, right? Man, so this is the problem, and I'm actually working on building a little short form video on short squeezes right now. The problem with these companies, and I've spoken about it several times, the problem with these companies that need to raise cash is when they actually start squeezing higher, the CEO goes, "Oh great, I can raise stock at a valuation for my secondary at $18 as opposed to $12." And then they do it and it crushes the stock back down, right? That's what caused AMC to top back in its run. Andy here, SPY has bounced off of this trend line in the 50-day SMA area 10 times. Yeah, that seems to keep happening. Will that change? Eventually it will, but so far it hasn't. So far it's still kind of holding. So, it's another higher low. We'll see. From Christian here. During the weekend, I went back and rewatched your lesson on breakouts, my intro to technical analysis class, as you suggested. And I must admit, I was a little shocked by the amount of info I had missed the first couple of times I had watched it. One of the main things I'm having a hard time wrapping my head around, though, is how to use volume. It feels like by the time I see volume coming as confirmation, I'm late in execution. Am I looking at this the wrong way? Thanks and sorry for the lengthy question. Yeah, no problem at all. Happy to answer the question. You know, first of all, I appreciate the comment that you said here, that you went back and you rewatched the class and you're able to get a lot more out of it than the first time you watched it. I think that a lot of you guys here, anyone who's like new-ish on the team, you know, you've been here for 6 months to a year, you'll probably get a lot of benefit out of rewatching the videos. Even like the intro to technical analysis class, it's the first class, is the most basic one that I have in there. You're going to be able to get a lot more out of my classes when you watch them with, you know, 6 months to a year of experience versus when you first watched them when you were in your first, you know, 2-3 weeks at the company. So it's definitely a good idea to go back and review all those from time to time, even like a more basic class like that. So for sure, you know, we say volume as confirmation. I look at volume kind of in two ways. One is like consistent, relatively high volume, and other is higher volume as confirmation for a particular technical setup. So, you know, one of the things that is a signal that the stock is in play, and I know this is not what you're asking about a specific trade setup, but one of the signals that the stock is in play is when that volume is really consistent, like bar over bar over bar over bar. And that's a great stock to focus on oftentimes because of the relatively high volume. Trades in general are going to have a higher probability of success. The relatively high volume usually means that the stock is going to have a bigger range than it usually does, which can increase the risk reward of your trades on there. So that's one form. The other form is volume confirmation in the trade itself. So for example, like the root that I mentioned, or snap. Root's a great example. The low of the day today is the highest volume bar of the day. That's confirmation when I'm looking at this as a trade back through $6 that I communicated to you, that I'm coming in and I'm kind of buying it. Now, one of the things that you're countering me with, which is a great point, is sometimes I'm late. Right? Like, I was looking at root back through 6, but if you waited for the candle to close where you knew for sure that it had higher relative volume, well, stock's already at 615, and if you're buying 615, this is actually not a good risk-reward trade, because off of this volume, the expectation is a bounce to at least the ADMA. Well, the ADMA is at, you know, like 24 cents. So you're coming in for 9 cents of reward to the first target, with risk of down to 96 cents. So you're coming in, you're risking 20 cents in a $6 stock for 9 cents worth of reward. And I'm sure we can all agree, you know, whatever I just said, 20 cents risk for 9 cents reward is not what we're looking for in the market. Christian, some of it, and I hate to point to tape reading because even though there is the intro to tape reading class also, which you guys should watch, it's very basic. I hate to point to tape reading ever as a real answer for you guys, because even though I'm a good tape reader, that's like my background as a trader, I'm consistently emphasizing to you guys that technicals in the modern market are significantly more important than tape. That's true. I can see the speed of the tape to know that volume is increased. I can also tell based on the time of the candle, right? So you got to be paying attention to the time. So what do I mean by that? These are 5-minute bars, right? This is the 9:45 candle. So it means that this candle started at 9:45 and it's ending at 9:50. So the volume on this is bigger than any other candle. At what time? And I am constantly kind of paying attention to the clock also when I trade. And you might even hear me say sometimes, oh, we got 2.5 more minutes until this candle closes. Part of the reason I'm doing that is because I want to see how much time there is until the bar closes, meaning what is the odds that this is going to close as an inside candle? Or sometimes I might mean, wow, look at the volume that this is traded in 2.5 minutes. So maybe by 9:47 and 30 seconds, so 2.5 minutes into the bar, it had already done as much volume as the previous bar, which was a little bit less than the previous two. But I know that if I'm only 2.5 minutes into the volume on this bar, and it already did what took place over the course of the last 5 minutes of that bar, I already know I'm starting to get that volume confirmation even though the candle itself hasn't closed, right? So that's one way you can look at it. So I am looking at the tape. I'm seeing the speed of the tape and the trading, and I'm also seeing the growth of this volume candle in real time based on what time it actually is. So again, it is 9:47 and 30 seconds. There's 2.5 minutes still to go on this bar, but this bar already did as much volume as yesterday's candle. As the previous candle. Then I know that I'm probably going to have really high volume by the time this thing actually closes. So that's kind of the more complicated but accurate answer to how you see it. I hope it helps. And honestly, Christian, some of this is just about developing your trader eye. And that's one of the hardest things about trading also for newbies who are first getting started is I'm not any smarter than most of you guys. As a matter of fact, most of you guys are probably smarter than me. Maybe not all of you. I got the wonderful chief compliance officer leaving for the day, making fun of me as I talk about how dumb I am to all you guys, kind of laughing at me a little bit. You know, I'm no smarter than any of you guys, really. I've just been doing it for longer. And so that's what I'm talking about, the trader eye. It's a degree of experience. It's like I say all the time, trading is a lot like sports. If you've never traded professionally before and you've never seen Japanese candlesticks before and you're trying to absorb all the information I spoke about earlier on in the morning meeting in real time, you're trying to digest the 3 different indices, volume, gaps, relative strength, relative weakness, plus your 4 stocks that you wanted to pay attention to. What are they doing compared to the market? How does this line up with probability? It's so hard when you're new to be able to do that in real time. I could not do that in real time when I was new. I couldn't. It took me probably 8 months before I could start to be able to do that. So that's what you got to be thinking. You're doing this for 2 months, you're not going to be able to do all the stuff that I was describing earlier on in the day. And part of that is that trader eye, and that goes back to being able to see the volume as it comes here. So, Christian, you're clearly on the right path because you're asking the right questions. Keep doing that. That's my answer to your question and how you can start to see it. But it's also, you just stick at it, you just keep kind of developing your trader eye. It'll come together. And that's also, by the way, not to go into too many tangents today, that's also why when you're a new trader, risk management is the key to the business. You're just not good enough yet. I don't care what PhD you have from what university. You're not good enough yet. You haven't developed the trader eye, so you got to have that risk management. Root here is popping after hours. Robert asking me, what do I consider to be a flat open? Yeah, you know, generally anything less than 0.25% of a gap, probably, I would say is a flat open. And then there's obviously degrees to that. You know, we were seeing some days last couple of weeks where it was like a 0.02% gap up. That's basically unchanged. That's nothing. But I would say if it's less than 0.25%, it's not really enough for me to have too much of an advantage based on that gap. Namcap asking about Zillow. Yeah, Zillow's been on my watch list recently. I know $100 is a big level for it. Kind of potential double bottom here, actually. It held lows. This is low. 89.62. This low is 89.65. I love when the second low on a potential double bottom breaks the first low by just a little bit, because they shook everybody out. As long as I'm not the one who got shaken out. I love seeing that. It actually makes it even easier for the stock to go up. Yeah, definitely a good candle. So let's pay attention to that Zillow. What do I think about Path? That's the other one you're asking me about. Man, this Path has been so hard. It's been one of these stocks that I've always wanted to get long, and it's never given me a reason to do it. I think I'm still waiting for 65. Yeah, maybe it's building a base here of support, and I could have a much better price. But honestly, the longer it stays down here, the more bearish it is. And it's trading at a price where every single person who has ever bought it since the IPO is out of the money. That includes Kathy, there were some of these days here where she was literally buying, like, she was like half the buy volume of the entire day, which would blow my mind. So she's out of the money. Everybody's out of money on this. I'm just staying away from that. $65 on the upside. Tommy here. Do I short SPYs on a bounce tomorrow? I don't want my wife to leave me. I don't want my wife to leave me either. So the first thing I would say is try not to take your trading home with you. That's actually really important. I know you're probably half joking with me, but it's really important from a trading psychology perspective. If you have a good day, if you have a bad day, especially if you have a bad day, don't bring the trading home with you, which might be especially hard for people who trade at home these days, which is basically everybody. I actually prefer to trade at home. But you got to be able to kind of have like a mental wall or something where when you're shutting down, you're done, and it doesn't matter if you lost $50,000 that day. You gotta be able to live your life and never let it affect your kind of personal life. Tommy, the answer to your question depends upon a lot of factors, including positioning. I would be much more apt. So I didn't like the idea of short selling off the open on the gap up today, because the Qs are still in a bull market and the SPYs we're above 446, which is also a bull factor for the SPYs. What would have made me like the idea of shorting the open a little bit more this morning would be if you had a big portfolio of longs and you were using this common gap up as an approach to hedge yourself. So depending on your positioning and depending on how we gap tomorrow, which I have no idea how we are going to gap, maybe you would want to potentially put a short on. Outside of that, though, everything else held equal, if you're flat, I still don't think this is a market that you want to short. S&P closed back above 446 today, gave a little bit of a bottoming tail. IWM gave a great downside tail today. It is still neutral territory, and the Qs are still in bull territory. I got the S&P, the NASDAQ still telling me you're better off being a buyer than a seller, and I've got the IWM being neutral to bullish at this point. So I have no idea how we're going to gap tomorrow, or what new news is going to hit or anything like that, so I can't answer that question with certainty, and I don't know what your portfolio looks like, but generally I would say, the easier money is still to the long side in this market. Next year from Sebastian. Today I took AMC at the open at 52.01. I think I sold stock to you there. I shorted some at 51.99 at the open. Versus the low with TP. I assume that means target price at $55. It didn't work out, but I felt like it was a good trade. Can you check it? Yeah. So for sure. So first of all, don't let my comment about the fact that I actually shorted some there make you think that you did the wrong thing, because we probably have two vastly different game plans on two vastly different time frames. My AMC short, which I'm still light in, but I am heavier than I was. My AMC short is still based off of my original shorting game plan from when I was shorting heavily into the $60 area. So the fact that I shorted an extra small amount of stock right when you were buying it does not mean that you did the wrong thing. AMC, we spoke about in the morning meeting today, is actually one of the best looking technical stocks that you can find coming into today's trading session. The thing looks great. Whereas the other indices had these negative Maribozus on Friday, this thing could barely have an upside tail on Friday. Great relative strength. My concern that I mentioned in AMC this morning was the extension. Trading at $52 with the ADMA at 48. So you got $4 of extension and $50 stock. On a percentage basis, it's a lot, but it's not necessarily a lot if the stock is going to have a short squeeze. As we've seen back here, when it did squeeze, your ADMA on the daily was at 32 and the stock was trading in the 70s. Right, so just because it's a little bit extended doesn't mean it can't become more extended. So I like your trade, to be honest. And if you're trying it off the open versus the opening low, the problem with this is that you are relying 100% on momentum to pay you. That's not necessarily a bad thing. I don't like that personally, I don't like personally relying on momentum to pay me 100% in order for my trade to be successful. It doesn't mean that I don't ever do it. I do it. But basically what I'm saying is, and if you watch my meetings a lot, you know that I don't like having stop losses that are above the moving averages. In this case, the fact that you had that would have saved you money because it was going to fail no matter what today and stop you out no matter what. So you actually got stopped out faster, which is a good thing. But that would be kind of my one concern about your trade, is that the stop loss was in extended territory. But, you know, you're just doing a pure off the open momentum trade in a stock that has one of the best looking daily charts that's out there, that still has a 20% plus short float, that has the ability to have a short squeeze. I can't knock your trade. It just didn't work. You know, the market didn't help. Market weakness certainly didn't help. But this easily could have exploded with momentum and gone $55 right off the open, just like what you were looking for. So I think it's a decent trade there with a decent risk reward. So I can't knock it. Next here from Brian. How about just focusing on indexes instead of the manipulation with specific stocks? Interesting. So I actually find only trading indices. So first of all, indices can also be manipulated. Let me start by saying that, particularly by the robots. And we see it happen all the time, actually. I find that the S&P does not trade clean, whereas a stock like Apple, I find actually trades technically very clean. But I've always found that one of the things that the S&P loves to do, more similar to an Alibaba than an Apple, is you find that beautiful level. The S&P loves to click through that level by like 10, 15 cents or whatever it is, your SPYs, and then have the trade work in the other direction and shake both people out in both directions. So I don't necessarily agree with your statement there. I do think that one of the beauties of being a stock market trader is the fact that I have access to so many stocks. So on a day like today, even though I don't have a great example from today, on a day like today where I'm saying to myself, you know what, the S&P and the NASDAQ, the IWM look very out of play off the open. I do not feel like, off the open this morning, I did not feel like I had an advantage with the S&P, the NASDAQ, or the Russell, or any stocks that were correlated to them. One of the beautiful things about the stock market is I can focus on other stocks that might have heavy volume or news that are not going to have as much of a correlation to the S&P and can trade independently to them. So even though I'm paying attention to the S&P, this stock's not correlated, I'm focusing on it, I can have opportunity. That's one of my biggest poo-poos, if you will, on futures traders. The futures traders I know, they all trade the E-minis, the NASDAQ, or a couple of big commodities typically, like oil, gold, maybe natural gas, and that tends to be it. Nothing wrong with that per se. I just find it limiting because one of the hardest things to do as a trader is not trade, right? We kind of just discussed that off this open. But if I'm looking at a market, if I'm a futures trader and all I trade is the S&P and the NASDAQ and oil, and all three of those things are out of play, what do I do? If I'm a stock market trader, you can almost always find a few stocks that had news that are going to be trading independently of the market that you can focus on. So that's my answer to you. And I do trade the indices sometimes. I actually don't trade them as much as I used to. I'm definitely probably more focused on individual stocks. But I do trade the indices. I trade those leveraged index ETFs a lot also. Next year from Kyle. When would you look at Apple as a good buy? Yeah, Apple's broken. Kyle, was that you that asked about the talk about a premonition question? I think it might have been you or somebody who is a YouTuber who was participating in the afternoon meeting, who asked about Apple with the court ruling, and then it was the next day that it went against them and they wrecked this thing back down. And I was thinking about it on Friday when Apple was getting wrecked. I thought it was really interesting because we had just spoken about it the day before. And in hindsight, and I know I didn't say it in real time in the meeting, I'm not perfect yet, I'm working on it. In hindsight, what I realized was that this ruling is probably one of those rulings that it's not like if it works in Apple's favor, Apple's up 5%, but if it works against Apple, it's down 5%. I feel like this was one of those things where there was more risk on the ruling going against them than there was reward on the ruling actually going in their favor. And the reason for that we did actually touch upon. And we talked about how Apple's losing their monopoly power basically on the App Store is really bad for the stock because the services part of Apple, which is what the App Store is, the growth in services has actually led to a growth in the multiple. And a lot of the performance of Apple recently has actually come from multiple growth and not from actual earnings growth. So you lose that ruling, you lose potentially part of the multiple. So that's really bad, right? And that's why this stock, they ended up wrecking it on Friday off of that. Now, it's still more or less held. I was discussing with the team in real time today, this Maribozu low from the breakout at 148.61. It's still more or less held that today, so that would still be a key spot to watch. But I don't think this thing looks good. Negative Maribozu, staying inside there, or did it break the low? Negative Maribozu, inside day, barely held that support, but is not holding the 150 breakout at all. I still love Apple as a company. I think it's a great company to own as an investor, but I think as a trader, I think we need more time. So I don't have a spot for you to directly answer your question on when or where. I think we just got to take this day by day right now and kind of let this reset up, because for right now, best case, it looks neutral. You can make an argument it looks neutral because it still is holding this low, but this is such a damning candle from Friday, and today didn't really help. It just kind of consolidated weakness of Friday. So let's see if we get an inside day and down. This is a potential short setup actually based off of yesterday's high, or today's high. You could short versus today's high or momentum potentially through that low. And then if you see that happening, then you're going to probably see further weakness and further breakdown in the NASDAQ also, where the NASDAQ might lose 375. But yeah, I think we just got to be more patient. Huh, nice, Christian. I love that. I'm a big skier myself. So is Derrick N here. Derrick, you saw that Squaw just gave a rename. Would they just rename the mountain? Squaw Valley it was some not great sounding name. Was it Alpine Meadows? Is that what they called it? Palisades Tahoe. Squaw Valley's new name is Palisades Tahoe. I don't know. No problem. Next question is from Jack in the YouTube. How do I feel about RLX? Oof. RLX Technology, it's an ADR. I actually forget what this company does.
Chinese vaping.
What is it? Chinese vaping?
Yep.
Oh, yeah. I remember. I've been bearish on this company since it came out. Because I remember, if anybody here is from China can provide some extra information on this, I'd love to see it. Last time I was in China it was pre-pandemic. I think it was 2019. And in China, everybody smokes cigarettes. And my friends there all smoke cigarettes. It's actually brutal. Everyone is chain smoking on the trading floor. And I was trading in like this glass box of a trading floor along with all these guys. And they're literally chain smoking cigarettes in this glass door room. And it was like disgusting. No one vapes. And I asked somebody about it. And they said that vaping is illegal. And I remember actually when this company IPO'd, and had this big up day, and I think I probably was telling people not to buy this thing because I was like, I'm pretty sure last time I was in China, everyone was telling me vaping is illegal in China. So how are you having a company that does vaping go public here in the United States? This could just be one of those examples of where they're just trying to take advantage of American ignorance to raise money for whatever reason. That was like, not to get too off topic, is Renren still a stock? I'll never forget Renren IPOing right before the Facebook IPO, and they were all saying, oh, Renren, it's the Chinese Facebook, and they did that to hype this thing up, to open it up at a crazy price. Now, split adjusted, I assume here, stock was trading at $360 on the IPO. And it just went straight down from the moment it opened, and went all the way down to $1.50. Recently, we're seeing a little bit of a snapback in this thing, actually, which is interesting. Yeah, so RLX, fundamental perspective, I hate it. Technical perspective, I don't like it. This thing tried to have a dead cat bounce here. You know, got back above $6, which looks like there's a little bit of a key level. Broke right back down on that on Friday, and then had more weakness today. Stock looks dead to me technically, and fundamentally I don't like it. So that's my thought process on it. You know, you need this thing to get back above 550 immediately. I think that I would avoid that name. Nice, Kyle. Great stuff. Kirkwood over Palisades all day for sure. Rich giving us a screenshot here on Root and the VTF showing the volume increase. Thanks for that, Rich. I asked about Epic because I'm an attorney, and it's typically for federal judges. It's typical for federal judges to release opinions on Friday. Oh, that is interesting. That's interesting. I'm going to remember that one for going forward. So thanks for that, Kyle. All right, gang. It's after 5 o'clock. It doesn't look like any other questions have come in, so I'm going to wrap it up here. Hope everybody had a great day. You know, not the easiest day in the world, but I feel like our game plan was on point, and it helped me to be able to make money, so I hope it helped you guys as well. I'll see everybody tomorrow. Oh, check out again. I'm just going to keep haplessly plugging all my stuff. Check out Derrick the Trader on YouTube. We're going to be getting more videos out on there. Check out the @ProDesk VTF on Twitter. We're trying to build up a little bit of following in those couple of things because it's going to be able to help me and my team big picture. Have a great night, everybody. I'll see you all tomorrow.